Hello, everyone. Happy PPI Consumer Sentiment Friday. It is Friday. How is everyone doing? Happy Friday, Patrick. Hey, Christoph. We got storms today. But, this has been sort of a crappy summer here. It's been one of the crappier summers. But thank you for asking. I think it's good. Tomorrow's going to be absolutely beautiful. So, let's get the storms out of the way on Friday and let's have a wonderful weekend. Good morning, Jacob. Good morning, Royal Palms. Good morning, Jake the Snake. Morning, people in the background. I see you there. So, oh boy, PPI numbers. Little bounce up in the PPI. PPI month over month coming in higher than consensus at zero point 0.3. Core PPI coming in higher consensus 0.3. Year over year, both coming in higher also. Next is consumer sentiment preliminary for the August numbers. Keep an eye. The big things are the 5-year inflation expectations and the short-term inflation expectations to see if those continue to remain high. That's, I think, even more important than the current conditions and anything else, the consumer expectation number. But we could get some price action still moving at 9 a.m. Central, 30 minutes after the open. Let's see here. Everything pretty much started to drop red after the PPI numbers came out hotter than expected. We are entering some very key support areas. We still have waning momentum, but if you've noticed, the structure of the market over the last few days has definitely changed. Even to yesterday, I was expecting some choppier conditions. We got the momentum right off the open, and then the momentum back down selling into a very choppy back and forth day, and then down on the close. The groups. Let me just refresh this, since so much is going on. See. Only utilities and real estate is positive. Everything else, consumer cyclical, leading the charge down, technology, comm services. So you definitely see a shift there, but the market is getting a little tired, and it is a Friday. Will be on my toes for watching potentially for some short covering going into the weekend this weekend, because we are entering some key critical bounce zone going into next week. Probabilities on the FedWatch tool, it's now shifted out to where there's no cut. With these PPI numbers, there's no cut until May, so shifting from March to May. No, not a higher chance really for a rate hike. I mean, this pushing up a little towards, but nothing really baked in for even one more hike this year. Fear and greed, still in greed. We haven't even made it to neutral yet with the sell-off. So that's where that sits. Who else is joining us? Good morning, Sterling. Good morning, Tony. All right, here's what I am talking about. So we have the harmonics, the 50, and even below that, even if we were to have a bigger push down. So first levels are about 44.55 to 44.58. All right, I got to update my little harmonics here with this push down after PPI. But we have a clear path move that ends. I mean, we already dropped below. So let me take off a couple of these levels. Nah, I don't want to take them off yet. But see here, this up here was a breakout level right around 4,500. You see where we had the clear path move and the breakout level. The final end of the clear path move is down about 44.38. So if we get a final push down, here is my key support area that I am watching for a bottoming bounce move. All right, a recovery move that will be, unless we can really start seeing a shift in the markets, it's going to be a sell the bounce rally. A sell the bounce rally. Also on the longer term, it's a little hard to see but the rotation zones, is right about here. Let me try to do this. Let me do this. Hide drawings. There, you see the weekly rotation zone. So anywhere in here, I'd be watching for a bounce. then a higher time frame setting up a short position and a bigger rollover. And that bigger rollover could take us easily to the bottom of the rotation zone still. And look where that is. You know, the bottom of the rotation zone is by the highs now of last August. And then if it continues lower, we shall see. Remember, historically, the worst month of the year is April. That doesn't mean, I mean, September. That doesn't mean every September has to be bad, but we could get the nice bounce and then some interesting setups going into September. Also, for next week, Monday. Monday's definitely going to be 30 minutes earlier at least. And I don't know what my schedule is going to be like for next week. So it could be hit or miss. I'm sorry about that. Hey, options 22. Well, at least you're not in Maui. Very sad for what's going on with the fires over there. It's, what is it, death toll up to 55? Good morning, Richard. Uh, hey, Coco. What do you mean bears need to do better than this? What, why is it always a fight between bulls and bears? You just watch for the setups. Watch for the setups. Good morning, Anissa. We'll look at the 10-year yield, Sterling. Again, if I do miss anything like a Christoph yesterday, I did overlook the little mini double, which was triggered and ran up. And remember, when you have the third target extend beyond the candle bodies, you use the first and second targets. It almost got to the third target, but then this is what I was talking about. Breakout momentum, quick reversal, and then, you know, ending the day with a little bounce back, but ending near the lows. So that is why we had this potential setup earlier that is off the table now with the PPI numbers. So let's take a look at the bigger picture in the NASDAQ. This is a sort of a bigger picture. NASDAQ, we trading below the end of the clear path now into a lot of support right in here and holding at this 50. So I am really going to be watching for some that doesn't have to mean today, but I'm going to be watching for a bounce pattern. You know what I forgot on the ES? I forgot to do the upper levels. Let me just double check something there. That's the upper levels right now. You're looking at about 44.75. This is where I'd be real careful unless, you know, even with momentum, because yesterday we got some momentum off the open with a strong positive tick in the open that just collapsed. Then about 44.85 to 44.87, and major resistance is back at 4,500. On the NASDAQ to the upside, the breakdown zone with today's now is shifting lower. So you see we got a key close from yesterday at the momentum reversal and then retested at 4 a.m. Central. Little bounce down. So this is, you know, this is getting some significance. 15,144, 15,150. Then above that, it would be 15, roughly 195 to 15.2. To the downside, this is where, you know, we're trading right against this little 4-hour support ledge, even below there. This is where it gets tricky with waning momentum to the downside because there's 15,063, 15,043, and not until you get below about 15,023 do you go into another clear path move, which could be to 14,860, but you have 15,000 right there. So I am watching for some kind of reversal either today or tomorrow in this, or it's Monday into that area. The Dow, this spike up yesterday invalidated the remaining doubles since it was a stop lower because it hit the 75% harmonic. You see here. So that was invalidated. Key support. Dow's still holding up the best. I'm still watching. There's been a lot of buying pressure in this 35,150. And then it'd be 35.75 to 35.100. If that did break, we could see a pretty quick trip to 34.885, 34.9 with a intermediate level of 34.980 to the upside. I know, Coco, this is the Boomer Index. To the upside, Right now, this is still, this is a little messy, but I'd have to go, but you do have a little mini double. You do have a little mini double. So that's what I'd be looking at there. The Russell, it looks like we also do have a little mini double going into the open. So that's where we sit there. That would need, let me see on the 1 hour. Yeah, it could be traded on the 1 hour on a 1930, close above 1934. But again, that's, look at where that is. That's just a little bounce move, not even back to the rotation zone on the daily. Russell also trading against that 50 EMA in a very key support zone. The technical breakout zone from this clear path move is 1911. So 1905 to 1911, if we do break for 50, is the next key support zone where I'd really be watching for the bounce. VIX still now trying to get back up, so could not break below this 15 level. Really, I mean, a spike below it yesterday, but then a quick reversal. So it looks like we're trying to set up a higher range of volatility. Again, if we start moving up into the after the open, I will watch for more downwards pressure. DAX still watching for some lower prices in here. Did we technically hit 15,858? I'm just seeing. Yes, we technically hit enough to get us in. I'd use the conservative targets on this. Right now, I'll put on the aggressive targets just because we don't know if a low's in yet. And that's the only thing that could make me short-term bullish. Otherwise, I'm still watching for 15.7 area at least. Notes. This is still valid on the higher time frame. You see here, still valid on the weekly time frame, the daily time frame. This wasn't technically enough to invalidate it yet, but we shall see if it starts extending sideways. Now, do we have another? And we'll get to the yield in a second. Not quite there yet, so we'll look at that on Monday. I'm still going to be watching for, the trend is still down. The only thing, that, again, that makes me more bullish on, I got to shift this, more bullish on the notes is still a close above 113.08. Other than that, or if we get another mini double bottom and a valid, but we're not there yet. Now, as Sterling pointed out, we are in on the yield basis. We have hit enough for a potential double top. Now, I'd be using the conservative targets here, but we don't know if this high's in yet. And so I'd just rely on the first and second target area down there. So that's a potential. But again, I can't get bearish on the yield unless we got to close below 395. And remember, just because you have a potential, you see here, rotation zone rotating back up. This could, and this will get interesting. So we had the first reaction off the 87.5 harmonic. If we break out higher than that, we could easily retest the highs from last October. Easily. Which starts putting a lot of pressure on the bond market. So, we still have the bear steepening going on after hitting the first and second targets, but nothing really new going on today. Let's see. Good morning, Chris. So you believe there's going to be a bounce next week? I am looking for a bounce. We'll get to the spiders in 1 second. I am looking for a bounce that would be a short to intermediate term bounce. Dollar index now in triple top, never confirmed or triggered the double top, and I'm still, look, pullback rotation zone. Yeah, it's spiked below, but remember, key closings are key for the rotation zone. So we had the first cross coming up, finding some resistance, now setting up for a breakout pattern. 102.90 to roughly 103. I'll be watching for that happening. Still not breaking out yet. Crude, pulling back to the rotation zone. We might even see a slightly bigger pullback in crude based off of a short-term little divergence, but I will be watching for another substantial push higher in crude. Natty gas Could be a short term, more of a false breakout, but as long as it stays now above 257, watching for a higher base to build. Gold, nothing yet. We'll go look at the metals. Yen yield on the 10 years still stuck in this higher range, so stalling out there. But the yen climbing higher. Yes, the bigger double still on, but I'm watching for a continued push higher. A continued push breakout here too. 145.75, then 147.35. Euro confirmed but not triggered double. It needs another rotation down to completely invalidate it. That's why we got to wait for the triggers. If you're trading aggressively and doing the breakout, if it doesn't close, you can't carry it. Pound, going to be watching for stronger base to be formed down here. Bitcoin, absolutely nothing. Let's get to spiders. Spiders and the Qs. Spiders, 444.50. 444.50. See, I got to go back here even for the proper pausing bar, because we haven't got a great pausing bar on the daily time frame. Give me my other levels. There we go. So that's why I moved that back. I thought we were going to get a pausing bar, but we did not. We did on a 4-hour basis, but I'd rather use a daily pausing bar going into today. 444.50, right where we're trading now. 442.98 to about 443.79 is the major support zone. It would take a lot to push this down to the 50 today, but that would be 441.60. Remember, you also have a gap left behind at 442.46, so do not ignore 442.46. I am not expecting that today unless we get some serious selling or something really comes out poorly with the consumer sentiment and inflation expectation numbers at 9 a.m. Other than that, yesterday's low coming in at 444.70, so that's your first key area of resistance. Then you have the dual closes. You have the close at 445.75 and 445.91, so that would be my next target area. Then above there, about 446.27. Okay? And it just in case something, we get some kind of rip your face off rally, 448.40. On the Qs, 366.43, 366.25. So it looks like we'll at least hit the second target on the double, and we did break below the channel. Oops, what did I? Oops. We did break below the channel. There we go. And it's coming into a key support zone, 365.61. So that's your next level. This is only a pausing bar. You might wonder why I'm using this one, because it's the only pausing bar I have. This other one from the daily, we've already hit the targets. Right here, that's why I'm using that. It's all I have. So that would give me 464.54, but more so than that, I'd be watching 463.80. The end of this clear path move is coming in right in front of the 50 and just below this, just right around where we're trading now. So we have a lot of support in here also. With cycles at the bottom. That's why I'm, again, more so I'll shift this afternoon or after the Europe close. Remember, Europe closes, trading into Europe closes have been very key. There's been shifts in sentiment, whether bullish or bearish, right around the European close, so pay attention to that time frame. 10:30, 11 Central, even 11:30. But that's where I'm watching right down here for the final areas. And remember, on this double, only the first and second targets were higher. We're going to open right around that second target. If we do break, the final target is near the wicks of the move that started and created the double. We'll get hold. Oh boy, lots of stuff in here. Let me just look at a couple other things. Tesla still on. If it does bounce, there's some of the sentiments changing on Tesla. I'm really watching for a break lower. The always bulls keep stepping in and buying. Not necessarily watching today for much, but after a bounce, going to be watching for more aggressive setups. Still, 240.70 is key. The levels have not changed. 234. Then the major 50% retracement and the harmonic is 255.50. Nvidia trading against the 50 now. So this is an area that today we're trading a bit below it. If it does come down, the key level is 406. But I will be watching for more of a bounce down here in this area. But the things have definitely shifted in Nvidia. Lower highs, lower lows. Even the channeling flag pattern has now broken. So that does not mean we can't bounce. But the has shifted in Nvidia. Apple, things have shifted. I'm watching for some kind of bounce. We had the little mini double bottom on the 1 hour that you gapped up, did not trigger it on that closing basis right here. And it technically triggered it here, gapped up to the stop reduction. And sorry, I was thinking about a different stock. And then just retested and turned it into an invalidated double. This is more of a horizontal, but you see, Apple's not been able to get much traction. And look at where the rotation zone is on the daily. So at this point, any rally next week in Apple, we'll be looking for sell setups. It has not been able to get any traction. Yes, cycles are starting to turn up. But look, we got the hooking over 50 now and the declining rotation zone. And that's even set up to where we don't even get a major part of the gap filled without potential rollover. So that's where Apple sits. We are against very key support. There's a very key support structure in here for Apple. And on the weekly basis, we're holding the bottom of the weekly rotation zone. Now, if we close today below that weekly rotation zone, it'll even get for more aggressive potential watching for setups and with a return to a lower price. But right now, major support even down to 176.37. And then below that, you have still a remaining gap, 175.43. But I would be watching for some potential reversals in that this afternoon. Yes, Bob's still long gold. Is it a long-term play for him, Coco? Remember, what's a long-term play? I could be in a long-term play for a very long time. For example, I've accumulated some long-term silver positions like around $13, $12. When's the last time we saw that in silver? That's a long-term play. Doesn't mean can't trade around it, but it's a long-term play. 4-hour potentials in the Qs, and I'll look at. Yeah, I doubt that will trigger today. That's probably, if these levels hold, I'd really watch for that next week. And even if it did trigger today, I look for an entry on Monday. I'd look for an entry on Monday in the Qs. So what else did you have up here? What else do we have? MU. Triggered massive monthly double top, has rebounded and set up potential weekly double top, is approaching the 62.5 retracement, happens to be right at the weekly 200. Well, Sterling, very good. Weekly, let me see, daily, weekly. Yeah, I mean, this is, and nothing here invalidated, remember, on a stop reduction. The stop level is still 79.70. You're just, see, that's the way to do the analysis around a big picture. So, but we rallied off the first target. Yeah, but this is a monthly, I mean, look at it on the monthly. This is a monthly major pattern. It can take many months to play out. So you trade things, and now you have a weekly pattern, which could take you back to the lows, potentially if it triggers, not triggered yet, but also that would re-break the 200 and break this broke it here, but then it bounced, but then that could re-break that key support after reversing at the 50. See, Sterling's starting to put all this together, all the concepts together. Jake, what do you have to say? HD forming a daily double top against key resistance. Thoughts on HD long term? Buy if we can get to lower levels. Yeah, we got some daily. Now that's also look at where the rotation zone is on the daily. That could trigger and get the rotation zone out of the way, at least on the daily. The conservative targets right now, this is I'd still use conservative, because then if you wanted, if it's still plowed through this with momentum, you still have a gap pot, because you could use a little final stuff, and I'd really use my final target if we plowed through this with momentum as the 200. Let's take a look at the bigger picture. Bigger picture. Where did this stall out at? Okay. You asked me bigger picture. I would be watching closer to the 300 area again before I'd even consider looking for a longer term buy pattern. Down here, you see how strong the weekly 200 is held? So that could be a key area to lean against, and then I'd be looking for at least to see if that's holding. So that's the area. I wouldn't even be looking here just yet. This isn't a big, unless you were talking for a longer term. If you're talking short term, yeah, it comes back to weekly rotation zone. As long as you really don't get a close below about 310, that could be a shorter term bounce play. But for a longer term position, I'd be closer to 300. Okay. And yeah, that just around this level, you still have this is where I'd be watching for a shorter term bounce play should the double trigger, and then the longer term lower. All right. So that's the analysis on those. We are into the open right now. Let's see. Got a little. I'm going to take a look at the tick real quick. The tick real quick. Didn't open below 1,000. So if we do get pushes below 1,000, take a little notice. We might get some push down here and a little exhaustion move on the open, which we are getting now. Coming into some key support. Coming into some very key support on the S&P. So unless this tick starts really breaking down, you see here right at that 50 on the daily and the harmonic. And then we saw that support zone for down to 44.39. So anything to the short side right now would be super short term and aggressive. And the Qs coming down into the key support also. Really pay attention to where the Qs closed today in relation to the 50 and also the S&P. I'm watching still for a pullback in gold also, Coco. I'm not, but remember, any gold position, I'm bullish long term. I don't know if we're going to hit 1,700 though. I don't know if we're going to hit 1,700. This is way too sloppy a pattern. I'm watching more for 1,900 and then reassess there. And if we did get below there, it would be 1816. You're welcome, Anissa. I shall talk to everyone. Remember, next Monday starts early, 30 minutes early. If you have to watch it on demand, I understand. So talk to everyone later. Bye for now.